Alright traders, I'm back again with another video. This time I want to talk to you about something a little different, but to me it's the main aspect of trading. More than any system, more than anything, is support and resistance. Okay, we're going to talk about support and resistance, and we're going to show you um, trading support and resistance levels along with moving averages, which act as support and resistance too also. Okay, so on my chart here I have a blue line. This is the 100 period moving average. This green line is the 200 period moving average. The red lines here, trend lines, and this 200 period moving average is very important because it's used by the big banks, and you listen to CNN or anywhere talking about trading, and you hear them talking about the 200 period moving average, and that's what we have on our chart, that green line. The blue one is the 100 period. Okay, so we have horizontal support and resistance, and I can show you that in a couple areas. And then we have trend line support and resistance. Let me show you the horizontal support and resistance. I can put it right here. Looking at the chart real quick, you can see it real quick, because coming down, these arrows here, the red arrows are fractals. These are fractals, high fractals, lower fractals. And when the market makes these fractals, they act as support and resistance levels. Okay, and you'll see it all over the chart. This is going to be a, okay, I'll show you here. First, you have this support here, come down, fractal level, support, price is holding there, and then finally it breaks through there, comes all the way up, takes a while, holds right here. When it held right there, move this right here, and you can see that's a support level. Okay, looking at that support level, price comes up, bounces on that level a few times, and then finally it breaks through that level. Now our old level, if we put the line back to where it was, price gets up to that level, and then it has a couple times before it can break that level. And then when it breaks that level, it comes back to that level, retraces to that level, and then it takes off. Okay, now you see the market trying to break through this trend line here. I don't believe it's going to do it this time. I believe it's going to pull back and come back down here and come around this 200 period moving average, around this trend line, where you have these all converging together, the trend line and the 200 period moving average, and even this 100 period moving average. That's going to be a strong support level. So if price even moves down to that level, we really would expect that to hold. Okay, so let's move this off the chart. We don't need it. So I told you, you have horizontal support levels, you have trend line support levels, and you have these 100 and 200 period moving average levels as support and resistance. I don't look at them as great levels, but they're good levels because that's where a lot of people are looking at. The market is being traded by big banks with those levels, so those are good levels to look at, have on your chart. And you could see where price bounces off of these levels and honors these levels before it breaks through sometime. Now looking at this chart, I want you to look at that chart. You see the 100 bar and the 200 bar, because the chart's getting ready to change, and I'm going to show you how I trade these. I already showed you this system before, but I'm going to get into it a little bit more. And here's the same chart, the exact same chart, but I have the between the 100 bar and 200 bar filled in. So this is filled in, colored in, and I don't trade anything within those 100 bar and 200 bar moving average. So anything in there I don't trade. I wait for it to break through, and I'm going to show you how I do this. Let's move this back just to show you a little bit. Okay, price came down, price was down here low, came down, flattened out, and then finally price started to move up and break through these levels. So it was down here, the market was bearish. Now we're getting above the 100 bar and 200 bar. We're bullish. We're above these moving averages. We're bullish. And then when you have the 100 bar crossing over the 200 bar from below, that's bullish. The market is bullish. So we want to be going long. A lot of times what will happen, you see here, it took a while for the market to break through this 200 period moving average, but then it did. A lot of times it'll retrace back, touch that level. That's when you get in and go. Now, if you can't do that, if that doesn't happen, you wait for these fractal levels. You can see this fractal level, these swing highs and swing lows, swing high, swing low, swing high, swing low, swing higher, swing low. When you see that swing low here, that swing high here, and the market pull back, once the market breaks that fractal level, you get into the trade here. Now you can put your stop loss a few places, and I'm going to show you this. Before the market ever broke through here, before it ever broke through the 200 period moving average and took off, if I wanted to take this trade and I took this candle here, and after this candle closed, I took this trade here, I took the market here, I can put my stop loss right where this red line is, a little bit below it. Because look at this. See the market hitting that line, can't break through. Hits that line, can't break through. Drops all the way down, drops down, makes another attempt. Hits that line, can't break through. Finally hits it, and then breaks through. Now, it can't break through the 200 period. So then it bounces back down to that line. Under here, this line was resistance. Now this line is support. This is a good area of support and resistance. So I can put my stop loss below there. I like to put my stop loss at levels of support and resistance, and sometimes it makes for a big stop loss, so you have to be careful. Okay, so if you got into the trade here, your stop loss would be underneath this line, and that's not very big. I have to calculate it with pips and see how far it is. So if we got in here, that's 91 pips. That is a big stop loss. If you're doing 4-hour time frame like I am, you have a 95 pip stop loss. But I'm going to show you what your reward is. Okay, you're risking 95. Now you don't have to risk 95 pips all the time. I'm going to show you this and show you how I do things, but you have to find a way to trade where your stop losses meet your goals. So you don't get into this trade because it's a 95 pip stop loss. Okay, so you wait. Now the market comes and goes back and starts to go through here. It makes this fractal level and pulls back. You make a line here. When price breaks that level, you get into the trade. Here's a smaller stop loss for you, because look, price breaks that level, you get in here, you put your stop loss below this level. Now it's a 65 pip stop loss because you put it below that swing low, well, that pullback level, which would be a fractal here. And when we break this fractal high, we get into the trade. Okay, now a lot of times you'll see these levels get broken and the market retraces back to those levels, so you know that these levels are where you want to have your stop loss. All right, and then the market continues to move, and if you risk those 97 pips, like I said, right now up here we're up 300 and 400 and 500, 600 pips all the way. That market went almost 700 pips. All right, so that was the risk. And that's what you're looking for on these kind of trades when you're trading this. I'm using a 4-hour time frame, so I'm looking for more based off of that 4-hour time frame. If I was using a daily time frame, it would be even more. But if you're using, like, you can use the 5-minute time frame, 10-minute time frame, half an hour, 15-minute, whatever. Okay, so finally price moves up, and then it makes this fractal level, and it doesn't break it, and it bounces off of that level. So now it comes down, makes another level where the first fractal low was. So what I do, I box that market in, and I wait for it to break that level, because I know where the red line is. I want to wait for the market to break that, and so I make a box around these candles, and finally price breaks through that level. I know this could be my stop loss here, right where underneath this red line, because I know this is a strong level, because look at all these levels where it held here. So now if I got in the market here and I put my stop loss right here, I'm not risking a lot. And I know that if price came back to here, it might hold because it held under here. So it might held as support here. But then you see the market go, it takes off. And then you see where the market used the 100 period as support. So it really missed it here, but then it came down and hit right on it there. It was close here, but it hit right on it. And then here it hit on it, and then it broke below it. Then it went above it, And then it went again. Now here's how you get in the market again. You see it bouncing here. It bounced here. You want to get into the market. You put your candle, you put your stop loss below this candle here. Okay, if you don't get into there, you wait for the market to bounce here, and you would have put your stop loss there. You would have got stopped out. Now when the price breaks through here again, you put your stop loss right here, right where this fractal level is, and look at your reward. All that up there. And then price comes back down again, and what does it do? It bounces on that level. So you could see that 100 period moving average is support, and then it takes off. Now you could see the market where the moving averages were wider. Now they're starting to get closer together, and the trend is changing. And then it breaks through here. You get into the trade here. You could put your stop loss above this candle here. You could put it above this 100 period, or you could put it above this level here. But then you see the market consolidate. If you don't get in the trade and you see it starting to do that, box it in and wait for it to break out of that box. So it breaks out of that box. Now you can put your stop loss above this candle here, because you're holding this as your level where you feel the market's going to hold, because you see it holding right here. So now coming up, it should hold that level. So that's why you will put your stop loss a little bit above that level. And then what does price do? It takes off and goes down. And now price is moving back up. And here's where we are now. Let's get to where the market is now. I could trade this candle here because I'm below both moving averages. I'm outside of the cloud, and I want to go ahead and trade that market, and I would have made from here to there. But then the market would have came up, I would have got out. So I probably wouldn't have made a lot depending on how I took my profit. But I'm just showing you levels where you could get in, how you could get in. Okay, so you don't trade between the two moving averages, but now price breaks above this moving average, the 200 period. You want to take the trade on this red candle. Really, you would put your stop loss below here, but for you guys, if it's a big stop loss, the reason I put it here, because this is the support level really, and the market could come all the way down to here and then go back up again. You could use your 200 as stop loss, so you would put it below that next candle a little bit, but you're not giving the market room to move. And usually when it first breaks through this 200 period moving average, it consolidates a little or it ranges a little, then it goes. So it pulls back a couple times and then it finally goes. Okay, now you could see this is today, and here we had a fractal level, and then the market closed, and then now the market opened. When this candle closes above all this, you will get into this trade long. You'll put your stop loss right here, right below this level. Why you get into this long here? I told you like this. You break this fractal level, going that way, you want to get into it and put your stop loss at this fractal level. Okay, and then you got this trend line here. That's going to be a level that if we break that level, then we're looking for a support level here. Market could bounce here. Now every time you get into the trade, I'll show you another thing. So you get into this trade here. Your stop loss is here. The market moves down, pulls back, then it breaks this little fractal here. You can move your stop loss down to here. Now the market moves down, comes back up, retraces, and then it breaks that level here. You could put your stop loss right here. You see where I'm putting my stop loss? These fractals. And then the market breaks down, comes up, breaks down. You put your stop loss here. So we're using the fractal as a stop loss and as an entry point. Okay, so that's how I trade this right now, and I guess I'll end it here. We could come back and talk about this for a while. I'll talk about this again, and we'll go over this trading philosophy, show you these support levels, how to trade these fractals. These fractals are very big, very important for me. And then the moving averages. Okay, so this is all we're using to trade. We're using the support levels, resistance levels, fractals, and then the moving averages. and these trend lines. So this is all stuff that we're putting in ourselves basically, except the moving averages. Then we're going to put our own support levels looking at the fractal levels, and we trade those levels. All right, guys, hopefully this is helping you. If you don't understand how I'm trading it and what I'm doing, just let me know, and I'll keep going over it, and we'll continue to talk about it. But hopefully I'm being a blessing for someone and blessing somebody that hopefully they can start learning to trade and making some money on their own. All right, traders, till next time, God bless.